Something strange is happening in the silver market right now, and almost nobody is paying attention. The same quiet conditions that existed before past explosive moves are forming again, and if history repeats, the jump could be fast, violent, and life-changing. Imagine waking up one morning and seeing silver, not at $30, not at $50, but already racing past $80. With headlines scrambling to explain what just happened, by the time the public understands, the biggest gains may already be gone. This is not fantasy, and it is not hype, because every major silver breakout in modern history followed a predictable sequence of warnings. The signals appeared first, the move came second, and the crowd arrived last. Today, in this video from the Gray Ledger, we are going to walk step by step through the exact timeline and warning system that could point toward a move from $80 to $300. And once you see how the pattern works, you may never look at silver the same way again. But before we go deeper, take 1 second to like this video and subscribe, because this channel exists to track the signals most people miss. And by doing that, you help more people stay ahead instead of being left behind. Now let's slow down, because silver does not explode randomly. It moves in phases, and the first phase always begins in silence. Phase 1 is what experts call the boredom zone, where prices move sideways and nobody cares. The media ignores it, investors ignore it, and attention shifts to whatever feels more exciting. This phase can last years, and during this time, the public slowly loses interest. But behind the scenes, something very different begins to happen. Smart money starts accumulating quietly, without creating attention. They move slowly, patiently, and deliberately, because they understand what comes next. This is exactly what happened in the early 2000s. When silver sat under $5 for years, while most people laughed at the idea of owning it, and then, without warning, it began a climb that shocked the entire financial world. But here is what most people never realize. The real signal was not the price itself. The real signal was the shift in pressure building underneath the surface. Silver is not just a metal. It is a pressure gauge for the global financial system. And when stress increases, silver eventually reacts. Think of it like a dam holding back water. For a long time, nothing happens, and everything looks calm. But behind the wall, the pressure keeps building, and eventually something gives. Right now, many analysts believe we are once again in that quiet accumulation phase. Prices are moving, but not yet in a way that creates panic or excitement. This is the stage where the foundation is built. And it is also the stage where the biggest opportunity exists, because almost nobody is watching. The warning system always begins with small signals first. Signals that seem unimportant until you connect them together. One of the earliest warnings is when silver stops falling during bad news. When negative headlines appear, but the price refuses to collapse, it tells you something has changed. It tells you that selling pressure is being absorbed, and that someone, somewhere, is buying everything they can. This is how every major silver breakout in history began. Not with noise, but with quiet strength that most people ignored. And if the pattern continues, the next phase could arrive faster than anyone expects. The second phase always begins with confusion, because the price starts rising for no clear reason. At first, the move is small enough that most people dismiss it as temporary. Silver might climb 10%, then pause, then climb again, almost like it is testing the ceiling above it. Each time it pulls back, it refuses to fall as far as it did before. This is the moment when pressure begins escaping the dam, but only in small cracks. The structure still looks stable, but the force behind it is growing stronger. The next warning signal appears when silver breaks a level that held it down for a long time. This is when experienced investors suddenly start paying attention again, because they know that resistance is like a locked door, and when it finally opens, momentum can carry prices much further than expected. What once stopped the price now becomes the floor beneath it. In past cycles, this is where acceleration began to feed on itself. Rising prices created attention, and attention created more buyers. But the real shift happens when physical silver starts behaving differently from paper silver. This is when shortages, delays, and rising premiums begin to appear quietly. Dealers may still show silver for sale, but delivery times slowly increase. The supply exists, but it is no longer flowing freely. This is one of the most critical warnings in the entire system. It tells you that demand is no longer normal. At this stage, the price might approach a psychological barrier, like $50. And this number matters more than people realize, because it carries emotional weight. When silver approaches a number the public remembers, memories of past spikes come back to life. Suddenly, old headlines start circulating again. People who ignored silver for years begin to feel curiosity, and curiosity is the first step toward mass attention. But still, most people hesitate because they assume it will fall back down. They have been trained to expect disappointment. This hesitation is what allows the next phase to build even more power. Because while the public doubts, accumulation continues. Another warning sign appears when pullbacks become shorter and weaker. Silver falls, but buyers rush in faster than before. It is like watching a ball held underwater that keeps slipping toward the surface. Eventually, it cannot be contained at all. This is the moment when silver can move from 50 to 80 faster than anyone expects. And when it reaches that level, everything begins to change. Because $80 is not just another number. It is a signal to the entire financial world that something unusual is happening. And once that signal spreads, the countdown toward the most explosive phase truly begins. When silver crosses $80, the emotional atmosphere shifts almost overnight. What once felt impossible suddenly feels real, and disbelief begins turning into urgency. This is where phase 3 begins, and it is the phase that rewrites expectations. Because once silver enters price discovery, there is no clear ceiling left. Price discovery is when the market moves into territory it has never sustained before. There are no recent reference points, and that creates both excitement and fear. The first warning inside this phase is speed. Silver no longer climbs slowly, it starts jumping in large, unpredictable moves. $5 in a week becomes $10 in days. $10 becomes $20 before people have time to adjust. This is when media attention starts pouring in. News anchors who ignored silver for years suddenly start talking about it every day. Headlines begin asking if silver is the new gold. That question alone brings millions of new eyes into the market. The next signal is public participation. People who never cared about metals begin searching how to buy silver. Search traffic rises, conversations spread, and demand expands beyond the usual circle of investors. This is where the countdown accelerates because markets are driven by psychology as much as reality, and psychology spreads faster than logic. Another warning sign appears in volatility. Prices swing wildly, sometimes rising sharply, then falling just enough to shake confidence. These drops feel scary, but they serve a purpose. They remove weak hands and transfer silver into stronger hands. Strong hands do not sell easily. They hold, and by holding they reduce available supply even more. At the same time, fear begins spreading in a different direction. Not fear of losing money, but fear of missing out. This fear pulls in the largest wave of buyers yet. Their buying pushes silver into even more extreme territory. When silver approaches $120, something deeper begins to happen. The move is no longer seen as temporary. It begins to feel like a structural shift. Like the rules that once controlled the price no longer apply. This is when institutions that ignored silver begin trying to enter, but their size makes entry difficult. Because the higher silver goes, the fewer sellers remain. And that imbalance creates air pockets above the price. Air pockets allow price to jump quickly, sometimes without resistance. This is how markets move vertically instead of gradually. In past manias, this vertical phase shocked everyone watching. Prices moved so fast, they did not feel real. And yet, the most important warning signal is not the price itself. It is the reaction of the public, because when belief replaces doubt completely, the final phase is no longer far away. The final phase is the most dangerous and the most seductive at the same time. Because this is when silver stops feeling like an investment and starts feeling like destiny. At this point, prices may cross $150, and the move begins attracting people who never invested before. They are not driven by patience, but by emotion. They see others winning, and they want the same result. They are no longer asking if silver will rise, they are asking how high it will go. This shift in mindset is one of the last warning signals in the entire timeline, because when everyone agrees, risk quietly reaches its maximum. The next signal appears in the speed of the final climb. Silver may rise $20 in a week, then $30 in days. Moves become so fast that they feel disconnected from reality. People stop questioning the price, and they start chasing it. This is when silver could approach $200. And at that level, the entire world begins watching. Governments talk about it. Financial networks debate it. The public becomes fully aware. But the most extreme phase still lies ahead. Because mania does not end at high prices, it ends at emotional extremes. This is where silver could enter the final run toward $300. If it happens, it will likely happen faster than anyone believes possible. The last warning signal is not technical, it is emotional. It is when people begin believing silver can only go up. History shows this belief appears near the end, not the beginning. It is the calm before the reversal nobody expects. Because every market, no matter how powerful, eventually exhausts itself. And when it does, the fall can be just as shocking as the rise. This is why the timeline matters. It's not to create fear, but to create awareness. When you understand the phases, you stop reacting emotionally. You start seeing the signals instead of the noise. You begin recognizing the boredom phase, the breakout phase, the acceleration phase, and the mania phase. And each phase tells you where you are in the story. Right now, many believe we are somewhere before the most explosive stages. The pressure is building, but the crowd is still mostly asleep. And that is what makes this moment so important. Because once the crowd wakes up, the timeline accelerates beyond anyone's control. One day, the headlines will suddenly appear. One day, the price will suddenly move. And one day, people will say they wish they had paid attention sooner. But by then, the opportunity may no longer look the same. This is why conversations like this matter. Because awareness always comes before action. If you've stayed with the gray ledger until this moment, it means you are already thinking differently than most people. And that difference can change everything. Now I want to hear your thoughts, because your perspective matters more than you realize. Do you believe silver could really reach $300? Or do you think the system will stop it before it gets there? Leave your opinion in the comments below, because these discussions help everyone see what others might be missing. And your comment might spark an idea someone else never considered. If you found this valuable, share this video with someone who still thinks silver is boring. Because sometimes the most ignored assets create the biggest surprises. If the countdown truly continues, you will be able to say you saw the signals before the rest of the world did.